Welcome to the Investing Podcast, presented by Tusk Media. Now, for your early morning look at financial news and activity in audio and video form, here's the Morning Market Mimosa.
Good morning, everybody. Welcome back to the Investing Podcast presented by Tusk Media. It is Friday, June 24th, 2016. Big day. This is the Morning Market Mimosa. We're coming at you a little bit late because we wanted to see how the markets were going to respond in the first couple hours after the Brexit poll results were released. So if you're listening to this, we'll catch you up a little bit on that. But if you want to really hear some of our analysis on Brexit, we did an early morning podcast. No joke. We got here super early, like 5:30. Laid down a recording session about 20 minutes or so and talked about why the vote results weren't necessarily shocking to us. We talked about why Britain would want to leave the European Union, and we talked about the reaction to the market. And we're kind of seeing some of those thoughts come true. I mean, we didn't necessarily know how the market would react in the first couple of hours of trading, but thus far it does seem like a lot of this has been an overreaction, and we'll get to that in just a second. But let's start off talking about the Brexit. The big story here, and we've been talking about this for several weeks, really is just that the vote happened, number one. And number two, the UK is leaving. You probably know that by now. Hopefully you know that by now. If we're your only news source for stuff like that, that's probably not great. But hey, we're glad you're here anyway. But so it was actually a wider margin, I think, than people expected. And it was a surprise result. So not only was there an upset, but the scoreboard really reflected a decisive upset. As of yesterday morning, everyone seemed pretty confident that the UK was going to stay in the EU. And by midpoint in the day, some of that started to look a little fuzzy. They started talking about how rain might be an impact, and the weather itself might actually change how the voting went, which is usually a sign that maybe this isn't that decisive. You know, if you think you know what you're going to do and then you see rain and you change your mind, maybe you should rethink what you're doing to begin with. So kind of an odd sign that we saw there. And then as the night went through, I kind of stayed up and watched it on TV and on Twitter because I'm a nerd. And as the night went through, it was becoming more and more evident that the Brexit was going to happen. So 52% voted in favor of leaving the EU versus 48%, which really was about as wide of a margin as we've seen in the last week. And again, that result was a surprise. When that happened, futures tanked. In the middle of the night, last night, like 3 a.m., U.S. futures were down like 4 to 5% across the board. It was pretty wild. This morning when I got here to record the podcast, futures were down between 3 and 4%, so we're not looking good, and you were starting to really see all these headlines with words like bloodbath and panic. But the markets did open, as they do just about every morning at 9:30 a.m., and people decided that they were going to kind of analyze what was going on. Not a ton of opportunities there from our standpoint. We think there's a lot of stuff that was truly beat up, and rightfully so. But we also think some stuff was being dragged through the mud, and you've seen a lot of that stuff actually already rally up. So right now, to get you guys up to speed, everything's down about 2%. S&P is down 2.05% for the day. The Dow down 1.96%. NASDAQ down 2.41%. But this isn't nearly as bad as what we saw kind of internationally. As a reflection of that, the global down is down about 4.25%. Oil getting hit hard, down more than 4%. On the upside, we do have gold. Gold was up about 4.5%. But we got to have some context for that, and that's kind of what I have here written really distinctly as things. A couple things to point out here. I think the bigger story coming out of this is going to be whether this populist voting result is something we can expect to kind of span the globe. And I'm thinking specifically about the U.S. election. You know, obviously this had an impact on U.S. markets, but if populism is going to kind of become a global theme and going to become kind of the new way yet again, so an old way becoming new again, then we really need to start looking at what a Trump presidency might look like. And that's obviously going to have a much bigger impact on the U.S. stock market than anything that Britain decides to do. Now, am I calling for a Trump presidency right now? Absolutely not. But if he is elected, I think it's going to be on the wings of populism, and that's exactly what we saw over in Britain's voting yesterday. So that's kind of a big thing to keep an eye on. The other thing I think that's important is to really think about some of these themes that we've talked about before, one of which is the Fed and interest rates. We don't think interest rates are going to go up anytime soon. This has given us enough downward market volatility that I think we're going to coast through the summer with no rate hike. That's getting priced in right now into bank stocks. Bank stocks are cheap right now. They're down a lot. Are they necessarily a value that we're going to take action on right this minute? Not necessarily. They're down as measured by XLF, which is the S&P 500 financial sector ETF. it's a mouthful, but basically bank stocks that are in the S&P 500. It's down about 3.5% today, and to be honest, that's probably pretty reasonable given the fact that we're not going to see a rate hike, and therefore probably not going to see banks start to kind of widen their margins. So you're seeing that at play, and so again, we get back to talking about the Fed. We need to get that Fed air horn going on. That's Joseph supposed to fill in there, but we've got to get that kind of work through that, see when we actually see an interest rate hike, see what's going on. But that's going to be a thing that continues in perspective, people. We talk about it all the time, and we mean it. Think about this right now. Again, headlines on MarketWatch.com, as I walked over here to record, literally had the words bloodbath and panic. That was on the front page as I walked over here. Right now, compared to where the market closed last Friday, the S&P 500 is down 0.05%. Again, 0.05%, 5 basis points. If you want the actual numbers, right now the S&P 500 is trading at right at 2,070. Last Friday it closed at 2,071. So have some context. I think we really had a false run-up leading up to this with some false presumptions about how the Brexit vote was going to go. So Monday through Thursday, you kind of saw that, especially yesterday. And now we're getting a correction to reflect that. But keep your eye out on real value opportunities there, people. We don't necessarily think this is an opportunity to blindly just buy the market. We're certainly not doing the opposite and running for the streets. We're going to be back in a little bit with a late stock market power lunch, probably around 1:30 or 2. And next week, Bond Week, everybody. Get excited. It's going to be nuts Monday through Friday, talking about bonds and how much better they are than sharks. So that's really going to be the theme because it's also Shark Week. Y'all have a great morning and lunchtime, and we will talk to you in a little bit. Have a great day.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.